Hello, my name is Asha and welcome to this new edition of Business Africa, your magazine dedicated to the continent's business and economic news. As usual, you can win $150 in our Business Africa game. More details later, but first, today's top stories. COVID funds mismanagement? The question arises in several countries, such as here in Cameroon.
I
think this money came for a much-needed purpose. For the benefit of the entire population to fight this pandemic.
In Ethiopia, coffee is aptly named brown gold. It supports more than 15 million people and has acquired its letters of nobility on the international market.
We consume something like 50% of the coffee that we produce, which is not true for Kenya or Tanzania or Uganda. They usually consume tea.
Capturing the informal economy, African insurers are battling to increase their market share.
Market penetration in our countries is still very low at 1 to 2%. There is plenty of scope for insurance, and a lot of property and goods still not covered.
We open this edition with a delicate question that poses a problem in several countries. Have the funds intended to fight the COVID pandemic been well managed, or has there been favoritism or even embezzlement? From South Africa to the Democratic Republic of the Congo via Kenya and Uganda, several scandals have been exposed. The African Union and WHO have expressed outrage, and the populations are becoming much less tolerant when it comes to suspicion of wrongdoing. Our journalist Abubakar Munchili has covered this story in Cameroon, a country facing a real COVID gate and where the International Monetary Fund has requested an emergency audit. Take a look. The financial scandal around the mismanagement of COVID-19 funds in Cameroon, dubbed COVID-Gate, has fascinated various media. The case has ignited social networks as well as local press, while agitating public opinion and even dividing populations who, for some, demand sanctions for the culprits.
There is no smoke without fire, Mr. Reporter, and sorry to interrupt you. They may as well blame me or you. I think this money came for a much-needed purpose. For the benefit of the entire population to fight this pandemic. You cannot gamble with money meant to save lives. At this point, what should be done? They must return what they took. If these guys are guilty, they have to pay.
It all started when some members of the government and managers of public funds had to show up before the Special Criminal Court for a hearing. And it happened right after the publication of the summary of a report from the Chamber of Accounts of Cameroon in various social medias. The report highlights inconsistencies on the proper use of 180 billion CFA francs in more than 20 ministerial departments. The public institution in charge of accounts in Cameroon was seized by the high authorities of the country following a request for clarification by the IMF, the International Monetary Fund, addressed to Cameroon as well as other countries on the management of funds allocated to the fight against the coronavirus pandemic.
When the pandemic appeared, it was a real emergency. The urgency to buy the masks, the tests, to buy this and that, and many managers forgot that it was public money. Others thought that since we were in this emergency and overwhelmed by the virus, things were going so fast that no one was going to realize how that money was spent. But they're counting the cost now, since they understand that despite the fear of COVID-19, there are some who have nevertheless remained lucid. When the IMF gives you money, I think they should have known from experience they would have to account for it at some point.
It's not just in Cameroon alone where there seem to be problems with these funds. From Nairobi in Kenya to Lagos in neighboring Nigeria via Uganda, South Africa and the DRC, for example, overbilling and fraud, fictitious contracts or contracts concluded without respecting standard rules, embezzlement, purchase of defective hospital equipment, the list is long. The same scandal shook many newspapers and has given rise to investigations in these countries too.
Unfortunately, bad habits die hard. Corruption plagues Africa so much that people are able to come and steal a coffin in a cemetery. They are able to rob people in a hospital and steal from their pockets, and unfortunately it's in this situation that we find ourselves. People have allowed themselves to gamble with money that was supposed to save lives. I don't think there's a worse example of cynicism. Naturally, we should be sorry, since Africa keeps regressing due to this bad behavior.
Well managed, these funds in a country like Cameroon could have helped enormously and perhaps be a game changer and support many people.
There was talk of producing chloroquine. We realize it's a business that has emerged. It's manufactured elsewhere and packaged here in Cameroon.
The money was poorly managed because when we speak about coronavirus, the family is concerned, especially when you have an affected member, a patient. This money is meant to assist them. This is what it is for.
Corona n'a pas que des inconvénients. Si cet argent avait été bien géré,
Coronavirus doesn't just have drawbacks. If this money had been well managed, for example, by setting up specialized care centers with specific equipment, and not just beds,
parce qu'il fallait non seulement des lits, cela allait augmenter le nombre de lits dans nos hôpitaux.
it would obviously increase the number of beds in our hospital, but also the need for oxygen tanks and kits, which would have allowed many of our hospitals to be equipped with these and also benefit from them at the end of the pandemic, right? Now, the drugs, for example, erythromycin and everything else that were used, if the protocol had been respected as the donors wanted and that the money had indeed been used for what it was meant for, I think we would gain more in the long term after the pandemic.
And to talk about this future and prevent such scandals from happening again on the continent, whatever the field, many actors, especially those from civil society, insist on the need to involve the populations in the management of public affairs, but also the necessity to punish dishonesty and especially to watch over the choices of those called to manage public affairs.
In Cameroon's COVIDgate scandal, no one has yet been charged, but audits are continuing, so the case is far from closed.
And now is the time to assess the consequences of a second coup in 9 months in Mali. As you know, transitional President Ba Endor and Prime Minister Mokhtar Wane have been temporarily detained. They resigned, leaving in power the new strongman, Colonel Assimi Goïta. Since then, the country has been threatened with growing international isolation. After ECOWAS, the African Union has also decided to suspend the country from its bodies. And this until a civilian constitutional regime is put in place. Elections are due to be held in February. In Ethiopia, a consortium led by Safaricom and Vodafone won the tender for the new telecommunications license. But this victory could be thwarted. In question, the decision of the U.S. International Development Finance Corporation aiming to suspend its aid to Ethiopia because of the crisis in Tigray. A $500 million loan for the purchase of the equipment related to the license is actually in the hot seat. We remain in Ethiopia, a country known for the quality of its coffee. Around 95% of production is of organic origin, and in recent years, its price has increased significantly. It must be said that the country, where more than 15 million people live from this culture, has long fought with international lobbies to have the particularity of its coffee recognized and to obtain better profitability. And it did, as Pauline Duchesne highlights in this report.
Almost 40 million cups of coffee are consumed every minute of every day around the world. Second only to oil, a lot is riding, both economically and socially, on the little black bean. Governments, industrial groups and entire populations. 125 million people earn a living from coffee growing worldwide. Here in Ethiopia, there are over 15 million. Coffee doesn't just represent 60% of exports, it's also a true cultural tradition in its own right.
We consume something like 50% of the coffee that we produce, which is not true for Kenya or Tanzania or Uganda. They usually consume tea.
Traditionally, Ethiopians take their coffee at home. They drink it with friends or family and take their time. The green grains are roasted before being infused several times by the woman of the house. It's a far cry then from machine coffee.
In hotel and the house, the difference. The house is better culture, Ethiopia.
Kaldi's Coffee opened its first store 15 years ago. The owner, Tsadei Azrat, dreamed of opening a Starbucks here in Addis Ababa, a trendy coffee shop serving brews from around the world. The multinational turned him down, so he opened Kaldi's Coffee instead. And there you can get any coffee you like, as long as it's Ethiopian. The menus, logos, staff uniforms, and even the design are carbon copies of the famous Starbucks chain, with a difference.
It's quite unique. It's a decent place. It's not like the other places, and the decoration and everything, I like it.
Macchiato is much better in cafes because they make it on the machine, and it tastes much better. Much better. It's kind of hard to make macchiato at home.
Today, Ethiopian coffee is in the process of becoming a national cause, championed by people and government alike. A slap in the face for the multinationals.
We are voicing to introduce globally fair trade practices and different form of ways to alleviate the global poverty.
After the 2002 coffee crisis, a result of overproduction, NGOs started campaigning in favor of Ethiopian coffee. A successful international campaign led by associations such as Rainforest Alliance, Fair Trade and Oxfam challenged the legitimacy of world market forces.
They are not paying a fair price for the farmers. They influence the market because if they are not, they decide we are not want to buy this coffee, there is no another alternative market to sell your coffee.
To protect themselves from fluctuating market rates on New York and London stock exchanges, the sector decided to create their own stock block. When the rate drops, they stock. When the rate rises, they sell. Better still, by guaranteeing top quality coffee, the Ethiopian producers benefit from higher, more stable prices. Thousands of sacks of coffee beans are stored in huge warehouses. The coffee is sorted, washed and tasted before being sent by truck to Djibouti and on to Europe, America and Japan.
In Zambia or in other Western Africa countries, there is a cotton market, a cacao market. It's the same problem in different parts of Africa. Globally, there is so many unfair practices because of this natural resource and the marketing. And the Africans are voicing again to support this fair trade things.
As with cotton and cocoa, coffee is a vital raw material in the fight against poverty. Not only is it a major source of hard currency, it also provides a living for millions of families. The mobilization seen in Ethiopia against the trusts is already proving fruitful.
It's a long fight, yes, because the multinationals have to be convinced to raise the price of conventional coffees. It is the problem with all the international trade. It's not only the problem with Starbucks. It is the problem of unfair world trade rules. The products which are going from the south are getting a very low price.
But in 2006, the US company Starbucks and the Ethiopian government finally agreed to the distribution, marketing and licensing of the Ethiopian specialty coffee brands. A great victory for fine coffees such as Harar, Yirgachefe and Sidamo. The government strategy has succeeded in winning its bet to educate the international public and increase the popularity of Ethiopian coffee, with very positive results on exports and revenues. A sweet revenge for Ethiopian coffee producers.
Welcome back to the second part of our show. The Kenyan banking group, Equity, has great ambitions in Central Africa and in particular in the Democratic Republic of the Congo. According to its president, James Mwangi, the number of customers of the group, which is already present in 7 African countries, could soon approach 100 million. To advance its pawns in the DRC, the banking group already acquired a majority stake in the Commercial Bank of Congo last year. Precisely, does this approach of Equity Bank in Congo suggest a consolidation of the banking sector in Africa? How will African banks respond to post-COVID uncertainties? To answer these questions, I'm joined by Henry Claude Oyima, the CEO of BGFI Banking Group, whose head office is in Gabon. Henry Claude Oyima, hello, and thank you for joining me on Business Africa. First of all, how is your group resisting the impact of the COVID crisis?
I think that COVID should not be a handicap for us bankers. Rather, I consider that it should be an opportunity to reinvent ourselves, an opportunity to do things in a new way. It's a cycle for us that must start, and when a cycle begins, we can't be nostalgic of the past. We must write a new page. And this is what we are doing at group level, reinventing ourselves, reinventing our bank to better please our customers and forget what happened in the past.
But your establishments are facing a lot of bad debts.
These unpaid debts are not due to companies' mismanagement. We cannot blame these companies for having unpaid debts, since the situation was at a standstill. So the most important thing for us today is that states are launching recovery plans, which are coherent and making it possible to guarantee to all companies, stakeholders of the economy, renewal, recovery, and total confidence in this new economy.
Do you expect higher interest rates that could cripple lending?
What is more important for us today is to find the necessary and badly needed resources to support our companies. These companies are in urgent need of both short-term cash flow and, mostly, medium-term cash flow to support new projects. Not old projects, but new projects that create growth and which ensure the development and well-being of our people. The problem for me today is not the interest rate. The interest rate will necessarily adjust with the growth rate that will be observed in the coming years.
We're currently seeing some banks seeking to gain ground by entering the capital of competing institutions. Is this the beginning of a concentration of the African banking sector?
I am campaigning for the banks to be able to concentrate on having instruments that are more solid and that allow us to meet the needs of our economies in a sustainable way. As it is not normal today that our companies or our states have to seek external funding. We have instruments in our own countries that can sustainably support these companies and states. So I am actively campaigning for our regulators to be able to support us, so that we can have strong institutions and banks in terms of concentration of equity, and raise the level so that we can support all stakeholders in our different environments.
Henry Claude Oyima, thank you. They are less known than their Western colleagues, turned heroes of literature and cinema, and yet they exist. I mean the spies of the continent. African James Bonds are usually engaged in intelligence, but today South Africa wants to ask them to do more, but on the economic front, and by supporting the international expansion of large companies in the country. The South African groups MTN and Sasol could be the first to benefit from this initiative. Only 3%. This is the still very low penetration rate of the insurance market in Africa. The first obstacle to development is, of course, the considerable share of the informal sector in economic activity. But African insurers intend to reverse the trend by relying on their in-depth knowledge of the local ground. Take a look. Since African nations started gaining their independence in the 60s, the insurance market has taken off. According to FANAF, the Federation of African National Insurance Companies, founded in 1976, the sector's turnover has leapt from 22 to 68 million euros today in terms of premiums.
Our countries had agencies, subsidiaries of major French groups. Now most of them have become national companies with their capital and headquarters based here. I think the FANAF has done a lot to encourage that.
FANAF is indeed the main reason why African insurers have risen to prominence. The Africanization of the continent's insurance companies has seen African executives gradually making their mark in major European companies inherited from the colonial period. In the beginning, it was essential to be able to mobilize capital to finance fledgling African economies.
The brains behind the FANAF project were Senegalese, Ivorian, Gabonese and Congolese nationals who are running national insurance companies. These people were getting little or no support from outside their respective countries. They realized that strength lay in unity, and that together they would be a force to be reckoned with.
Their strategy has paid off, but there's still a lot to be done. It is estimated that half of Africa's working population has no insurance.
Market penetration in our countries is still very low, at 1 to 2%. There is plenty of scope for insurance, with a lot of property and goods still not covered.
For over 40 years, the FANAF has been working with its members to develop a sector in upheaval and lobbying lawmakers to change legislation. In the 80s, the professional association called for an African approach to compensation for personal injuries, for health-related issues and for victims of road traffic accidents. Member nations also passed laws to make sure rates were better adapted to an insuree's ability to pay. The organization is constantly looking for new ideas, new ways to reach its goal of becoming a key savings fund for the continent.
We will need to attract a lot of savings if we are to have any impact on funding African economies and to make sure the continent does not depend on the World Bank or the IMF or the West to finance its projects. I'm confident that given the right fiscal framework, the African insurance sector will be able to build capital that can be put to use financing the kind of projects that will make Africa an emerging continent.
This potential whets the appetite of large international groups such as AXA and Allianz, which are present in around 10 countries on the continent. Faced with its new challenges, the African insurance sector seeks to take advantage of the digital transformation to reinvent itself with new products.
One product in particular can be marketed digitally, starting with computers and then on to mobile phones and tablets. The possibilities are almost endless, both in terms of supply and demand. Our clients are increasingly demanding, and there is no time to waste.
The insurance sector also supports major infrastructure projects on the continent, but these are heavy investments that require insurance companies to have strong capacities to provide comprehensive coverage. And in the absence of these guarantees, non-African insurance giants are generally preferred by prime contractors to protect their investments from all kinds of disasters.
People have to stick to the rules. I have nothing against certain companies getting involved in Africa's infrastructure development, but some are bending the rules and are not covered properly.
Consequently, African governments are gradually strengthening regulatory and capital requirements of insurance companies. Once their solvency is guaranteed, they will be able to better compete against international rivals and exploit their knowledge of the field, whether extending their expertise as insurers to protect rural populations and crops, as well as supporting the modernization of agriculture. It's now time to reward our loyal viewers of Business Africa. It's up to you to answer to the following questions. If you're drawn among those who have given the correct answers, you will win $150. This is game number 552, so listen carefully to the two questions that follow, and good luck. First question. The COVID gate scandal in Cameroon amounts to the sum of 180 billion CFA francs, 120 million CFA francs, or 80 million CFA francs. Second question. What is the turnover of the insurance sector in Africa? 22 million euros, 68 million euros, or 94 million euros? You know the answer. You can participate now by going to our website, africaonair.com. Answer the questions, fill out your form, and good luck. And of course, don't forget to include your contact details, name, address, telephone, email, and the number of the game you are entering with the answers, of course. This game, for example, is game number 552. The winner will receive $150 as our winner this week. Congratulations, you gave the correct answers to our game number 548. Here are the details. First question. How many visitors does the Douala Grand Mall welcome per day? The answer is 10,000. Second question. What's an apatam in Togo? Answer, a tent. That's it. Business Africa is over for today. I'll see you next week, same time, same channel, for a new edition of Initiative Africa. In the meantime, you can catch this program again on our website, africaonair.com, as well as on all our social media channels. Feel free to share, like, and comment using the hashtag Business Africa TV show. Take care of yourselves and see you next week. Goodbye.